Thank you very much, and thank you everyone for attending this, and hopefully we can entertain as well as explain GoviEx and what we do. GoviEx was founded in 2007 by a gentleman by the name of Govin Freeland. His father is Robert Freeland, who's been serially successful in developing mining projects, particularly in Africa. The first slide, just out of interest, is from our project in Niger. It just shows you the environment that we work in. Disclaimers, cautionary statements. I probably will make some forward-looking statements, so these are covered by these statements here. GoviEx is Africa-focused. We are a uranium-focused. We are a development-focused company. We've developed our strategy along that basis. We've developed our board gradually over time to focus more on a board that's readily available, has the skill sets and a management set, the skill set for building a project. We have two main projects. We have the Maduela project that's in Niger, that's fully mine permitted. We're currently focused on the financing for that project, having completed the feasibility study for it at the end of last year. We have the Mtanga project in Zambia. It is also mine permitted. We are currently in the process of undertaking the feasibility study for that project, and we'll have that finished by the beginning of next year. And we have one pure exploration project, which is the Falaya Project in Mali, which is currently under a process of sale, which we will continue to have a substantive holding thereof. We've been in this sector really because we believe in the uranium sector. We very much believe in where nuclear is going and how its position as part of the green energy strategy around the world has been accelerating, and particularly in the last 24 months. It's all about timing in this industry. We are looking at a position where majority of major utilities have order books that have substantive space in them from 2025 onwards. The demand from nuclear continues to grow, and we're seeing supply side being squeezed. We're already in a supply side gap. Therefore, timing looks perfect for our projects to come into this market. We have a substantial amount of resource. We stopped most of our drilling back in 2013. But we have a lot of exploration upside and can expand, but our focus has been on these large resources and turning them into cash flow generation. We are in Africa. We find these are mining-friendly jurisdictions. Niger is the 5th largest producer of uranium. Last year, Niger accounted for 25% of all the uranium consumed in Europe. It's got a mining code that has been consistent. We've had regular government elections coming through. It has the skills required for the mining of uranium. And in fact, the last president of Niger actually used to work in one of the underground mines, Niger. It has a proven transport route as well for shipping uranium out into the various converters around the world. Zambia is relatively new to this, but it was fully permitted for the Kariba Project, which is in Malawi next door. All of the production from Kariba, when it was operating, had to be transshipped through Zambia into Namibia and Walvis Bay. It has a very regularized radiation code, and as you probably recognize, is very much a mining jurisdiction with a long history in the background of copper, and actually has the longest running democratic government in Africa. Mali's relatively new as a gold play. As I say, it's an exploration play for us, but is covered, like Niger, is by a standardized law, business law in OHADA, and is part of the ECOWAS structure. On the uranium market, obviously we've had a period of down from 2011 through to 2016 as a result of Fukushima. We've seen an increasing emphasis globally for clean energy and net zero. What is becoming very much clearer to government, certainly since COP26, that a baseline clean energy source has got to be added to any infrastructure development that's going out there. You cannot rely on pure renewables. The battery technology hasn't got there. And it is very clear to most governments that nuclear is becoming part of that. China has a very strong growth development program in nuclear, currently producing about 57 gigawatts of capacity. It's looking to expand that capacity to 140 gigawatts by the end of the decade, and then expanding up beyond that. Japan, which obviously was impacted by Fukushima, is looking to get its power reactors back up to 20% of their total of power generation, is now considering building new. And you've seen the change of sentiment there, where the latest poll has 71% of the population of Japan pro-nuclear now, despite the impact back in 2011. You've seen a lot of change around the world as well, where reactors are getting extended lives. They're initially from 40 years, and in the US have now pushed that out to 80 years. The US government has a $6.4 billion program to support nuclear reactors going forward. And we're seeing increasing emphasis with support from the US, UK, Canada, China for the development of small modular reactors. And we've had a number of companies doing deals announced within Europe for the development of these small modular reactors, particularly with Poland looking at Rolls-Royce, a 300 megawatt, and we have another government in Eastern Europe looking at a similar design coming out of the US. In fact, even in Africa, there are 14 different governments looking at small modular reactor deployment, development of nuclear energy in those regions. So you're looking at a strong position for growth out there for nuclear. However, we have been looking at a position where we consume at the moment about 190 million pounds of uranium, but we actively currently only mine 130 million pounds of uranium from the ground. That gap to date has been filled by secondary supplies, either by inventory, where utilities were holding too much inventory as a result of the 2011 collapse in the market, and or secondary supply material coming predominantly from Russia. However, we've seen a substantive drawdown now on those inventories. We have seen the expansion of the SPUT fund, which has taken well over 50 million pounds of uranium from the market as well. That has resulted in effectively an increasing move to a fact that we need pure supply now to meet growing demand. And in order to achieve that, we need higher prices to incentivize new production. And that takes us to where we are. We have the Falaya Project. This is very much on path to becoming a major producer and replacing the closed down Cominac mine, which is next door to us. We benefit from being very close to Orano's projects. We have existing infrastructure. We have the roads. We have skilled labor right next door to us and local. We have substantive groundwater. There's very large aquifers, but we have done a lot of work of reducing our water consumption, and we have grid power. These are standard sandstone hosted deposits. We have all of our permits in place. We have strong government support, with the government a 20% shareholder, of which 10% is free carry. And we're certainly on track to getting our construction going by the beginning of next year and targeting production in late 2025 going into 2026. We finished our feasibility study last year, updated that, really in the peak of the inflation cycle, particularly on shipping. We did a lot of work to make sure that it was a fully sustainable operation. We're not relying on any other third parties here. We will have our own power supply from a renewable. We'll have our own process plant. We've included solar here. We've put in 8 megawatts of solar. Surprisingly for myself, that despite being in the middle of the Sahara Desert and ensuring that we have a substantial solar plant, it's only 26% of our total energy. And I think that highlights one of the issues with regards to solar energy and its application of being part of major supply. We will bring in further solar when we go underground. We've completely redesigned. We've ensured that our design for our tailings is continuously rehabilitating. So we followed all the best practices. We halved our water consumption going into the feasibility study by putting new applications in, and reduced our total power consumption over the whole project as well from the previous PFS. It's a robust project. It will produce about $82 million a year of EBITDA. It's a $343 million capex to build, with an operating cost just under $29 a pound. Net present value and IRR really don't represent this project, because they really only cover the first 8 years of any commercial production. This is a 20-year mine life project. We have a lot of exploration upside on this. We can actually even access underground mining from the open pit itself, which is not included in any design at the moment, but is very much where we can optimize the program going forward. So it's a very robust project. Where we are at the moment is we have appointed Endeavour Financial to do our financing structuring. They've been working with us since September of 2 years ago. We've already announced that we have at least 20 different financial groups in our data room at the moment going through that. We'll hope to announce letters of interest within the next month of the companies that are going to carry on, and appointment of the independent engineers. We've been working solidly for the last year with off-takers, educating them on our program, and we'll work to structure off-take programs to support the debt financing, and ultimately with those two look towards the equity requirements for financing the project at the end of this year. What differentiates as well from our peers around us is the fact that most of them have one project. A lot of those are relatively short life, particularly in relation to the 20 years of mine life we have at Madaouela, which has additional exploration upside. We have the Mtanga project. It's in the southern part of Zambia. The government is very keen to see this one develop. They're very keen to develop mining. It is mine permitted. We're currently updating the environmental permits for it to bring them to an IFC. The current environmental permits are Zambian standard. Again, very good infrastructure. It's a tarmac road all the way to Lusaka. We're close to the Kariba Dam power station as well. This project has exploration upside between, but we're currently in the process of updating it to a feasibility study. We completed a PEA back on it in November of 2017. However, this PEA was based on 2 PFSs after we merged 2 projects together. It benefits from very low stripping ratio, but more importantly, very low acid consumption. The average acid consumption, just for a benchmark in Niger, is over 100 kilograms per ton of rock that you process. At Madaouela, we managed to reduce that to 50 through technology. And in the case of Zambia, it's under 10. And this is in a country that produces acid from the copper industry. And I think that really just highlights why grade is not always the key. There are many other aspects to a project that have to be considered. And that makes this project a very economic project. It's equitable, or if not better than the Madaouela project. And I think not many investors take cognizant of this long life project with its very high rates of return. Lastly, we have the Falaya Project in Mali. This is a very interesting exploration play. It has got copper and silver credits that go with it. We strategically decided that we should sell it. We have a transaction currently underway. And really, it was strategic in point of view that we really couldn't give it all of the time that it needed. Another group is going to take over. We'll be a substantive shareholder. We don't lose the upside potential from that. Therefore, we're looking to close that transaction by the end of March. We have a very strong commitment to ESG. It is very much part of who we are as a group. We do look at our environmental footprint. All of our designs are based on the environment. We review risk and we review ESG before we even start our project designs, and continue to make them part thereof, and focus on our sustainability. We've had a long-running stakeholder engagement program on both of our projects. We do look at how we can reduce our CO2 footprints as we go through the design, and continue with that as our program, and certainly look at the way we can reduce our impact on the water. in both of these communities. We have, since 2009, maintained a 100% local workforce strategy, and we consider that both from a national perspective, but also from a local, focusing on ensuring that we maintain our strong commitments to our local communities and all stakeholders. We put out our first sustainability report last year, and it's available on the Uranium website, and we'll continue to update that as we develop forward. And this is very much part as well. ESG is not just about, showing our commitment to the community, but it's about getting ourselves committed, ready for construction, to making sure that we are ISO compliant as we go forward as well. And that's becoming increasingly important for a lot of the off-takers who require these as commitments to go forward. We have a strong structure out there. We recently raised money at the end of last year, and we will obviously consider our equity options going forward, particularly as we move towards the development side of this project. From a valuation point of view, though, we continue to be, in my view, undervalued. I'm sure all CEOs say that, but I think we are. There's a peer that we have, for an example, who have a project require a higher price than us. They have a much shorter lifetime project. They're trading about $4 a pound. We're trading at 40 cents a pound in the ground. So there's a lot of uplift here for GoviEx. I certainly think people do not appreciate the sort of the benefits that come out of the Matanga project, as well as this very viable Madaouela project. I also would point to previous cycles where investors into uranium projects, and particularly African uranium projects, have seen their benefits coming from, one, companies that have gone from being developers to being producers. There's a massive uplift for that. But also, we recognize that strategic investors look for this, and Africa is an area that in the last cycle saw most of the takeouts at high value coming through. And so really, just to summarize what I've gone through there, the uranium market is looking as good as we've seen it. We've seen a lot of focus recently from the utilities, particularly on the EUP side of their market, as a result of what we've seen going with the Russian invasion of Ukraine and the increasing focus of the utilities to remove themselves from that constraint of Russian supply. So expect more focus back onto the U3O8 market. So it's looking very robust. We have the team. We are Africa focused because that's where we can get things done. I think that was one of the messages very much from the local recent Indaba, which is, there's an increasing focus on Africa, Africa's ability to deliver on a lot of commodities, and uranium is very much part of that. While there are exciting uranium projects in Canada, they've got years ahead on them, and permitting. African projects are getting ready now to be built now for the cycle as it develops. We have a very large mineral resource, but a lot of exploration upside to expand those, and we are permitted. And our whole focus at the moment is getting Madaouela financed, ready to go. And then the next stage for us will be getting the Matanga project into a similar position. So thank you for listening to me. I appreciate that, and I'm certainly available for any questions.
Thank you very much for this great presentation. That was a great run-off to the uranium and your project. Great. And I got a few questions from Olga here and from Armin. Again, everyone, if you have questions, we do have time. We still have 9 minutes to go with Daniel. Daniel, can you tell us how far away from an investment decision your project is?
Effectively, investment decision will come towards the end of this year once we know how the financing structure looks. And at that point, we'll be able to come to the market with that. Once we know what the debt and offtake looks like, that investment decision can be made and we'll raise the equity.
All right. And then discussing about that equity of 343, well, the total cost of the capex of 343 million, what would be your ratio? About 30% equity, 20-80, or how do you foresee right now with how it could look like?
Yeah, at the moment, we're targeting of that about 190 to 180 million dollars of debt, and then the rest will be equity.
Okay, great. Holger, I hope this answered your question. Armin wants to know, how does the Sprott Uranium ETF affect the sector? And may I add also other companies that have started business models such as holding uranium and so on? How have all of those secondary financial product really helping you out, guys?
Yes, Sprott. The spot did something pretty well amazing. We were stuck in a market that was really stuck at around $35 for a long time. Just really couldn't get much going. And then when Spot took over UPC, which is what it was before, they managed to move the uranium price up to the $45, and that re-engaged contract discussions between people like Cameco and the rest of the world. What it is doing, though, is continuing to squeeze out available spot material that would normally just get traded into the market. And so Spot has done a really good job of doing that. Spot is not a seller. It's just a holder on NAV. But so by taking out, 55 million pounds from an annual total consumption of 190, you can see what it is, how the impact would have. The other point I would make is that spot sales in total are only about 20% of total sales annually. So if Spot is doing everything in the spot market, you can see they are having a major impact into that market. They did go quiet for a while because they traded at a discount to their NAV, and they can't raise money when they're at a discount. They have to be back to a premium. They're only on the margin there, but they're sitting there. If we start to see the equity shares, and particularly that one, move, then they will have a much bigger firepower and will have a major influence on that. But we tend to focus more on the term contract, but there is a relationship between the two. If the spot market continues to move up, it will incentivize utilities to sign long-term contracts at higher prices on the term market.
Right. Yeah, I think it was a product that was needed, as you say, for the industry. It really helped them bounce back from where it was. And talking about bouncing back, you mentioned a smaller reactor. What kind of size do we discuss when we say smaller reactor? Something we can use in a house, in a car, or something actually a little bigger than that?
A little bit bigger than that, but it depends how big your house is. So if put it in scale, a industrial scale reactor that we're used to nowadays has a capacity of about 1.3 gigawatts or 1,300 megawatts. And they come in pairs generally, so you get 2.6, and that will power 8 million houses, roughly. They're fairly big. The small modular reactors go from the micro reactors, which are 10 megawatts, up to the largest small modular reactors, which are 300 megawatts. A 10 megawatt reactor will fit on the back of a truck, a low loader truck. And what is very different about the small modular reactors, the simplest, is that they are unpressurized vessels on all the design. So existing large reactors, the way they work is they have pressurized steam systems to make them transfer the heat. I mean, all they're doing is transfer heat around and then you run the steam. But what the SMRs have done is made sure that there is no connection between the radiation and the heat generation and the fluid that they're moving. What that means is that they can also be manufactured from standard, high quality steel, but that steel doesn't have to take under pressure. And the other benefit for them as a result of that is they're designing technologies that do not need to be reloaded for 15 to 20 years. So effectively, the small micros, for example, you can imagine are basically just the Duracell battery of the nuclear industry. And I think the other point to be made here is that people just talk about nuclear energy as electricity. It's not. 70% of the energy that's produced by a nuclear reactor currently goes out of the big chimney. What they have now realized is that energy can be used fairly aggressively in other areas. Hydrogen is a massive part of where the nuclear energy is pushing towards. UK government announced today by 2025, they'll be putting in 10% of the domestic gas use will now be hydrogen. EDF have been working aggressively on that program. producing hydrogen from when they have spare capacity. So nuclear is going to be very much part of the story. And we've seen that in Europe as well recently, a fight between Germany and Spain and France about green hydrogen getting onto the pipeline. And at the end of the day, that's where a lot of this hydrogen is coming from. We see it in desalination as well, other aspects. So nuclear is becoming part of the overall power story. It's not just electricity.
And how do you see the movement, so the transport and the logistic of radioactive material?
It is already very, very aggressively regulated. We have substantial requirements on everything, but I think, you know, it's actually incredibly safe because it's so well regulated. And I think also, I mean, U3O8, which is what we produce, is the yellow powder. The steel drums that standard oil drums block all of the gamma radiation that come out. So it is incredibly safe. There's never been any incidents associated with the transport of it, but that is really because there are such high degrees of regulation associated with it, and making sure it's moved safely and follows proper protocols and guaranteed routes. You know, you can't just send it anywhere. Even for us as producers, we can only send it to 4 or 5 places in the world total. That's the 5 converters in the world.
Yeah, we saw Rio Tinto last week in the news losing just a little pill there, and it provoked quite a headache for everyone there. So obviously, it is highly regulated, and from point A to point B, which will obviously allow for those smaller reactors to be used all over the world easily and securely. Last question, surely the trick question: how do you explain the large discount at which you are traded compared to your peers and the overall market?
As I say, I think there's a lot of this is because a lot of investors tend to focus on Madajuela with us and completely forget that we've got the Matanga project. And I don't think a lot of investors appreciate Matanga actually has a higher rate of return than Madajuela going forward. People have got fixated on that. We very much obviously have, you know, a regional risk that people perceive. But again, I would point out, you know, Niger has produced uranium since the 70s without a hiccup. It's come through. So, you know, I think those are the areas that people just don't look at. They tend to assume, you know, that there's dilution on these projects. Yeah, I mean, but these projects are high returning projects. We're focused on getting them built. And then, you know, you saw that with Paladin back in 2004. It went from, you know, 7 cents to $7 from a value point of view. And that was its re-rating that it got by going from being a developer to being a producer.
Perfect, Daniel. On that, it's 2:30 here, Central Standard Time in Europe. So that means that time is up. I thank you very much for presenting GoviEx to all of our potential investors. If they have any question or they want to look up for news, I invite everyone to look up at your website. Daniel, thanks again. It was a pleasure to talk to you again today.
Thank you very much. Take care.